Are you personally worried as an investor that perhaps some of this is frothy and there could be pain in the months ahead if the easy money stops flowing, so to speak?
Yeah, let's not make any mistake, right? Let's say this as it is. It is a frothy market, and and capital is available in plenty. Sometimes the best companies get it. Sometimes even companies that would have struggled otherwise are getting it easier in today's market. But this is not 2015. We've come a long way since then. The depth of the market is significant. The quality of the founders is dramatically different, and people have gotten those experiences of how those times were when you just got funded with very limited proof points. And even today some of that will happen, but for the large part at least there is some learning in the ecosystem for us to kind of at least differentiate what is deserving, what is probably less deserving, and so on. But all that said, Chandra, this is the nature of markets, right? It will swing up and down. We'll overreact sometimes, but we'll overreact in both directions. So we're probably seeing some overreaction and some exuberance linked to kind of companies today. And that's coming after a time when everybody quit the market, post-COVID, and companies are struggling. So on balance, like on an average basis, things may be okay, but at periods of time we are seeing one way or the other some excesses here. So I do think we are going through one of those exuberant markets. It's a very difficult environment, even though it looks like a great time to be a founder. It's a very difficult environment, both for founders and for investors, because you're not able to kind of understand what all this interest means, what all this desire means. Because when you go raise capital at potentially crazy prices, let's say, right, you're also kind of trying to figure out how to keep the short-term motivations are great because everybody feels good, but there will also be a time when things will not look as good. Then you're carrying the burden and the pressure of what you signed up for. So I think the more mature founders understand this now. Now nobody's going to say no to capital coming at a high price if you're a founder. Look, if that's the decision of the market, it's the decision of the market. All that you have to know is, look, let's not get that into our heads, and let's ensure that, look, there is still a long way to go to deliver on the promises that we're making to the ecosystem, to the investors, to your stakeholders, etc. And do the right thing, focus on the right thing. So the thing that we keep telling founders is, look, it's great we have access to capital, but let's use it in the right way, right? And let's not kind of go back to some of the old habits. Don't you lose the economic shape you've created. Through COVID, you've created a phenomenal economic shape where you've cut the excesses, focused on the right things, right-sized, kind of focused on the more material investments that you need to make, etc. Let's not, you will have to loosen things a little bit for growth, but let's not go all the way to the other side saying, at any cost I will grow, and at any burn rate, I'll be fine, etc. Because that, again, the environment could change and you'd find yourself swimming naked in the ocean, right? So this is the thing that we are kind of emphasizing. It is tough. It is tough when the world around you behaves in a certain way to be very different. Your competitors may do something irrational. You may have to kind of respond to that, and you may not always have the choice to not respond. But that said, I think some of these, kind of disruptions are good, because back in your mind, you will know that, look, you've gone through those tough times, and that will help, calibrate your own decisions as you think about, going fully for growth.
Right. You've articulated what many people are talking about. One investor we spoke to yesterday for the story said, we're trying very hard not to do stupid things. So, it's really hard to resist temptation in such an environment. Everybody else sees value in a startup. We are unable to see it. We are even unable to understand how our companies are raising follow-on rounds because we don't believe they deserve the money at this point. So how do you retain sanity in such an environment, GV? Both from an investor and from a founder's perspective.
Yeah, look, maybe I'm a little bit in these things a little more philosophical. Look, the price a company, a price tag being put on a company should never be taken personally by the founders, right? It doesn't mean, just because, just to give you a simple example, we go through all the time. When the companies go public, they're worth X. People feel great, founders feel great. 1 week later, it's down 20%. Are you 20%, more stupid because of that, or 20% less self-worthy because of that? That's not the case, right? So we attach too much meaning to valuation. I think the right thing is to kind of think about the long term and keep saying, look, am I doing all the things that will make this business enduring business in the long term? And I think really that's what counts. As long as you can be focused on that, not get distracted by the price tag, it's a game that's being played, right? This is all Mr. Market. It'll be up and down at various points. Just because prices went down doesn't mean you're worse off, or it went up. Not doesn't mean you're a hero. Either way, I think that some detachment is helpful, and I think some people will be able to detach themselves. Not everybody can. It is a tough thing to do. But it is the right thing to do. You focus not on the valuation, but fundamentally creating value, and these two are different things.